Welcome back to Open Exchange. Investment company Brimstone has said that first half profit is satisfactory, despite being lower than the previous reporting period, partly as a result of a decrease in fair value adjustments of underlying investments. Joining us now to unpack those numbers further is company CEO Mushtaq Bray. Morning, Mushtaq. One of the words that we've heard a lot in recent times with company reporting is challenging condition. That's come up a lot. You used the word satisfactory for your results. It's quite a big drop in headline earnings, 153 million down from 478. So let's just see what's behind that, and in particular in the sectors that you're dominantly exposed to.
Yeah, morning, Dave, and thanks very much for that. It's been a difficult time. That we're quite happy with the results for the first 6 months. The major movements last year in the first 6 months, we had a great return on the fair value adjustment line for life healthcare. It went up close to about 500 million rand in that period, whereas in the current period it went up by about 190 million rand. So that's been the major change in the actual numbers. At the same time, some of the other divisions in actual fact have been doing much better. For instance, in our fishing area, CRs had a very good first 6 months. The rand dollars helped as well, the rand euro has helped us there, and fishing has been a bit better as well. Whereas in the short-term insurance industry, at Line of Africa Insurance, like most other short-term insurance companies that have reported to date, we've had quite a bad run for the first 6 months, and the actual loss over there for the first 6 months was quite substantial. The change from last year to this year at an operating profit level was in excess of 40 million rand. So overall, we are happy that we could still report a profit to our shareholders in excess of 150 million rand.
Now, if you look through some of your investments like Life Healthcare, Taste Holdings, Nedbank Old Mutual, MTN, Zakhele, Tiger Brands, Rex, Trueform, a lot of the term revaluation of the investment comes up. What's behind that? I mean, some of this is about financial adjustment, and some of it is to do with operational performance. So what's the difference? How should we look at this?
No. The ones through fair value, right? Those are all straight market to market. We take the number of shares we've got in those companies. For instance, in Nedbank, we take the market value at the end of December, and we do the same at the end of June. And in Nedbank's case, for the 6 months, we had a write down of about 30 odd million rand, whereas Old Mutual went up by 30 odd million rand in the same period. Tiger Brands, we took a write down, as we did at Taste Holdings as well. So there's been up and downs. Life Healthcare, we wrote up about 190 million rand again in the period under review.
Okay, so it's mark to market stuff.
Other operational, it's market to market stuff. Whereas our operational stuff, where we've got subsidiaries like Sea Harvest, House of Monatic, and Line of Africa Insurance, that comes through our actual income statement.
So then, looking at your exposure,
we showed operating profit there.
Yeah, and we're looking at people who would invest in you because you invest or hold these other companies. Do you have a kind of different baskets, different eggs things? Have you been able to say that at least one substantial part of our holding or our investment is functioning well?
Well, I think Life Healthcare has done well again for us in the first 6 months, as Sea Harvest, the fishing company, has done very well for us as well. Our investment in the other fishing company, Oceana, has done very well for us as well in the first 6 months. So overall, we're happy.
What about that?
The only real damn squib for this 6 months has been Line of Africa, which was a negative for us.
Yeah, as you said, the insurance sector generally has been battling. What about that sea exposure in particular? It seems an area where every now and then you see talk surfacing of overfishing. There are risks in the allocations of licenses, empowerment issues. And even though South Africa is a maritime country, I don't think we think of ourselves as a maritime country, and not too much attention is paid to those issues. You obviously pay a lot of attention to them. So what's your sense of where that regulatory environment is, both the regulatory environment in terms of regulations and licenses, and the physical environment of overfishing and resources?
I'm not so worried about the overfishing, because both our fishing companies do most of the stuff deep sea, as opposed to doing it inshore. The problem we've got in the industry is in actual fact the inshore stuff, or the near shore, where people can go out with a small little boat and go and overfish. We are mainly in the deep sea area, where you need real big boats to go out there to face the weather conditions, for instance. Some of our boats are in excess of 100 million rand each, and that somebody can't just go out from the small little harbour on the coast and go and do that. So the threat we've got in actual fact is on the inshore side. And it was seen a few years ago, we had the same issue. And our abalone industry was very badly affected. Luckily, Oceania actually got out of that industry before it happened. So I think from a regulatory point of view, we are quite okay. There are some issues which we need to resolve. For instance, on the hake side, our quotas are in place till 2020. The resource is in good condition. The resource was increased again this year. The total allowable catch went up by about 7.8% again this year. So from that point of view, I think South Africa is doing very well from a regulatory point of view and looking after its resources. The problem we got in actual fact is with the near shore or the inshore stuff, where there's a lot of illegal activity taking place as well.
Okay, it is something we should pay more attention to. Mushtaq, disappointing in one way, but satisfactory, as you say, in another after a difficult half. Prospects for the next set of results down the line?
You know, we're quite positive about our trading operational subsidiaries. We're very positive about that. Even at House of Monatic, we returned a small profit again for the first 6 months. We are threatened now again by a strike, but I mean, so be it. In the industry, we're quite confident for the next 6 months that we'll be doing well. I think the insurance side should start improving as well. You know, it's been through a tough period. I mean, we've seen it with all the industry players. You'll probably find a hardening of prices coming through in that sector, but that's going to be the only way of actually getting it back to where it should be.
Well, that's Mushtaq Bray, CEO of Brimstone.